I don't remember exactly where we started buying it, but it probably could have been in here because we're looking at charts and you, you had this long, long basing area, and here it comes down and it shakes out below this moving average. But you see how it came up and closed in the upper half or uh, and that's kind of important at a critical point when it undercuts that line and it comes back up over it. It's being supported. So while this volume is up a lot, it's really support because it's up more than 40% off to the bottom. It's probably about 55, 60% there. And it stops sort of in the breakout point over here. It, so it's doing what it should be doing, and the market started to correct there a little bit. It was a little sloppy. Um, and even though this is down, it's in the upper half. And I would say at 5 point, you can do it however you want. You have a declining line here and you're buying it there. Or if you wanted something else, you may take the peak here in this blue week or this blue week and you're buying it. So somewhere in there, you're buying the stock. Um, and you can take trend line there, and it'll give you a little earlier. And then when you're right, if it goes up 2%, you follow up and add a little bit more, never more. So you want to start each first buy with a fair sized amount. You don't want to be timid on the first amount because if you are, then you have to buy more at a higher price. And the concept is you ought to start every first buy with a certain minimum amount that you have in your head. Okay, I'm working with so much money, and the first buy I make on the stock is going to be X dollars. And it probably should be the same with every single stock you buy because you don't know which one is going to really turn out to be your greatest stock. So you want to start with a reasonable amount in that first buy and a little bit less in the second one, a little bit less in the third one. Now, if you start real small because you're not sure of the market and all that, now it goes up, and now you got to buy more of it at that price than you bought it in the beginning, and that's kind of a no-no. So decide how much money you're working with, how many stocks in a typical case are you going to normally buy, and how much do you start the first buy of stock. And you don't mess around with this. At one time, you're starting with a 5% today, and another time, some other stock is starting 10%, and another one 3% or 17% or whatever. You have a system. You're working. Start everyone with the same amount. And if it goes up 2.5%, 3%, you add a certain amount, not as much, which means that's why you start with a reasonable decision in terms of shares with your first buy. And then you buy a little bit less, but you follow up. And what are you looking for? Well, if it goes up 2.5%, 3%, you buy more. So that ought to be automatic. Because you never know which one is going to evolve better and better. I can look back over many years and see there were certain stocks that when we went back and plotted, I must have bought 25 different kinds over a period. You buy it here and it goes up, you buy a little more, and it goes up and buy. So, but you don't want to get into the situation where you weren't sure of the market, so you just bought a little bit. And now, as you get more confident, you're buying higher at more shares at this higher price. You get it backwards. So if it's not worth starting with the typical first buy, it probably is not worth buying. So you should start buying a certain amount, 5% or 10% or whatever you figured out you're going to work with. So then if you're starting at 10%, you might follow up with 5%, and then you might follow up with 2 or 3%. But you just work out what that formula is and stay with your formula, because the worst thing is you can get to a point where you're not sure about the market. So this one you start a lot smaller. And that turns out to be a big winner. And so you're in a situation of buying a little bit here and then a little bit more. And now you got to buy a lot. And that's backwards. So you start every decision with a certain specific dollar amount. And if you're not willing to do that, well, maybe that stock's not that great. So you don't start each one with a different amount all over the place. You start and you run a system. And if the stock's good enough, then you follow up. If it goes up 2.5%, 3%, you follow up always. You don't just go by how do I feel today.
When would you have followed up on Amgen here?
You over here?
Yeah.
Well, we were in this for a long time. I don't remember where we started, but probably it would have been, this is a double bottom. It has it shake out and closes back up, and you can get some support there. And you can either draw the trend line down across this way, or you would pick it's a little hard to see where this line, but that may have, it's somewhere in here. On that week, you're buying it. And you could have a trend line down like that, or you could take that peak and you're starting there. And where do I buy after that? I start with a certain amount, and if it goes up 2.5%, I follow up and buy more. But I'm buying less there than I did on my first buy.
So, Bill, I've got a question for you. So you probably added some shares along the way, then you get your first area under the 10-week. How do you recall how you handled this at that point? Did you keep all your shares?
Well, we're going to bring this down a little bit, and because there's a lot of there.
So we're talking about Ray.
We don't have earnings on either. Do we? What?
No. Just I'll give this. No, it's with. Yeah. So it's not first one. Yeah, we don't have the quarterly earnings, so we're not sure what's going on. But
well,
it was very strong.
Yeah, at the time, quarterly. I'm talking about here. Are there
the second
here? Well, you run up a long way.
It'll be about 60% or something.
And you stall there a little bit, and you're sort of wedging up. And the key is you wouldn't be buying more here because it breaks out, because you're seeing that you're wedging up, and all these, the bottom here is a little bit higher, and you're wedging, and sooner or later you're going to get this correction to undercut. So you'd have to be very careful. And this is not really the base here either. It's on 1, 2, 3 weeks. Well, it's extended almost double. So the correct way is after it's gone through some kind of correction. Now you got 1, 2, 3, 4 weeks down. 1, 2, 3, 4, and there's maybe an extra week in there that's real tiny. Is that an extra week? Anybody see that? Yeah. Let me see, where was the road right over here? Where were people going to stop for?
Right here.
All right. Okay. Is that little? No, it's not. Okay. All right. Well, regardless, as you're coming through this area here, you're starting to buy it. You buy it a little bit there, a little bit here. And you can buy it up to maybe 3, 4, 5% of this, and you're going to stop.
Josephine, can you highlight that low below the 10, that red week below the 10 week? I want to see what the bond looks like.
You know what? I also have a markdown Amgen.
Oh, okay. Well, let's look this up.
Here's markdown Amgen. That's a bunch of.
So there you go.
Take it.
You got all that? I hate to admit it, but sometimes we're doing things like that because you start with a certain amount. If it goes up to 2.5%, you add to it. If it goes up a little more, you add to it. And sometimes maybe your market conditions or something. I don't know what happened here, but these are the realistic things of what occurred. And so there was something bought there, and you sold a little bit of it, and you bought it back here. This points out something really interesting. if you sold some stocks and it comes out, it starts moving back up, you want to get that back up a little bit more. Because the concept is if it's a real big shot, each time you're going back in, you want to add up so your total position is getting a little bit larger and a little bit larger and a little bit larger. But it's not like you're finding and saying, put half of my market into that stock. It's being done as it's advancing and you're getting ahead and you're building profits. So your risk is not quite what you might think. You could wind up with, depending on what your rules are, with 25% of your portfolio in this stock at some point, or 15% or 50%, depending on what your plan is and how you work and where you follow up and when you want to cut back and add. Yeah, you got some questions.
So you allow the rest of the portfolio to dictate this somewhat, irrespective of what this stock's doing, like how you're hiring now he's doing. So if you're taking yield a little more on other positions, like you're protecting your gains a little more, irrespective of what the chart says. Well, you just specifically follow, the rules as they, this.
I think I'm buying one stock at a time. Now, I don't normally own more than 2, 3, 4 stocks. So I don't believe in owning 10 stocks or 15 or 20, and diversification gives you some kind of safety. I think, ironically, if you think you're buying 20 stocks, how are you going to keep track of 20? And the market starts to correct and you sell one, and it's still correcting. So you sell 2, and still you got 18 new stocks in your portfolio. I don't think, I only want to have 1, 2, 3, 4 stocks. And I watch them very close and I know them, but I don't want to have broad diversification because somehow that's going to help you or somehow that's going to mean you're going to make quite a bit. I know that it will work. And I'm sure some of you have 20 stocks in a portfolio. If you got enough money, you want to spread it out. Oh, there's nothing really wrong with that, except I think the big money is always made in concentration. And having most of your money in the best stock. And the second amount, in terms of how many dollars, is in your second best stock. So that if you buy 3, 4, 5 stocks, the ones that are the best, you always have more shares in it. And if you wind up having a stock that doubles and is really performing great, and that was your number 3 position or 4 position, you're just not doing it right. And sometimes you can have that happen, yes.
Okay, your rule, and I think the rules you came up with, how much to put in the stocks. If your rule is 10% first batch, 5% the second batch, 2 to 3% the next batch, does that change if the market has been in a correction and then you get a follow through that? Do you still start with 10% the first buy? Coming out of the follow through?
Well, I think my little rules I follow all the time. So if I look at how much money I have in the market, and so on my first decision, what percent do I want to buy? Do I want to take 10% position, or I want to start with 5%, or I want 15% or what? So you have a system and a set of rules, and every one you buy, you start with the same amount. You don't buy 100 shares of this one and 500 shares of that one and all over the place depending on how you feel. Because you don't know necessarily which ones are going to be the very best one. So start with the same amount. And if you're not willing to start with that, whether it's 5% of your portfolio or 10, if you're not willing to do that, then you probably shouldn't be buying that stock. So I work with a system with a lot of rules and procedures. And there's a certain place where I'm going to cut the loss. There's a certain place where I'm going to add, and I might have to buy it back if I sold some and I'm long. Yes, back there first.
How do you determine what stocks to hold through a correction?
What?
How do you determine what stocks to hold through a correction?
Well, that's a very good question, and I think first of all I wouldn't be owning 20 stocks. I think that's crazy. If you got a lot of money and you want to diversify, so maybe you have 10. But let's say you had 5 stocks, and you should know which one is your best performing stock, and it's got the most potential. And so you should always have more in that. If it occurs that you have less in it, well, you got to step up and somehow find a place to add to where the stock that you believe in the most with best earnings and best price action is your biggest position. So anytime I'm looking at my portfolio, the one that I have the most potential in is going to be my biggest position or second biggest. So don't ever want to get into this situation where you were right, but you just didn't capitalize on it properly. Yeah.
I just want to follow. I agree. I mean, 4 stocks.
Yeah.
Let's say, and this is my best stock. Are you making the additional buys? Like, is the fact that this is your best stock was allowing you to sell some of the other stocks and you're adding into this, or you just the other stocks are laggards and they're breaking, stop losses, and then you have the money available and you go here to deals. You try to get. Is that how you get to do 50% allocation in one stock? 50% that you got into one. If you have one stock, let's say 50% more, you want to put it. So is it like an aggressive? If these buys run, okay, I want to be in this stock more, so I'm selling stuff that's working too, or is it the other stuff's not working? I got this.
Well, I don't want to own more than 3 or 4 stocks. And if you got jobs in mind, maybe it's 5, 6, or 7. But I want to keep track of them, and I want the very best stocks. And I will always want to have most of my money in my stock that's performing the best. So those are the kind of rules that I go by. And a lot of times, depending on the type of market you're in, if you're in a roaring bull market, I remember I sold a stock that I thought was going to double because I needed the money. I wanted to buy something else I thought was going to triple. Now, that may sound crazy, but every once in a while you get in a market where it's a roaring bull market and there are stocks all over the place going up. And I've got one that I think is going to double. And all of a sudden over here, I've got this new one that the earnings are bigger and better. And all of a sudden, it becomes my number one position. So you just bend with the market and capitalize on what's going. And the same way, if the market's kind of tough, well, yeah, you went back away there and you back away there, and maybe you have to buy back, and then you got to back away again. So you don't argue with the market. But if you have a strong market, you may better make at least twice what the S&P makes. So in other words, you got to be in the leader, and you got to have that's got to be your number 1 or 2 position, and one way or the other, you have to get it to that point. Yeah.
Well, Melvin, are you sharing with us something that you've traded in the last month that might have gone from maybe a 20% position to maybe a little more aggressive position? You need stuff you sales in the last month or 2?
And you asked me the wrong question because I don't always remember. I have to pull out a list and say, what did I buy that? I'm not even sure what I own now. I'm 2 or 3 stocks, which I have to go back and look. Maybe that's age, I don't know. But
I was saying the last couple of weeks, couple of months, they said did some good stuff. Did you personally?
Well, I can't give you the answer to that because I will buy the time and place. If I see the earnings are there and the general market's right, and I will follow up if it goes up a little bit. So I'll wind up with certainly a large position. I don't even know what my large position is right now. So what I have to do, and maybe it's just age, I have to look at the list every day and say, nah, okay, I got 3 stocks, and I don't have enough of this one, and somehow it's in the right position. I'll probably get more of this. And also, we got a lot going on. You got 2 or 3 companies, and you got several hundred people scattered all over the place, and so I always have to go look at, do I own that? Yeah.
When we look at a pick and save chart, and can you show where you decided your line was to sell it that it never hit? You told a story where you had a lot of money in it, and you had a line and you sell it.
Yeah.
But never did it. So can you explain where it was and how you
Can we throw up
Yeah.
pick and save?
Do you have that to mark the chart? Well, that was the first.
Yeah. I don't know where was the peak in the stock.
Well, it is.
Question. The next one.
This was the trickiest,
this
the
is
tricky bear market that you've held.
yeah, this is a little unusual, but you go by what your portfolio is doing. And I started buying this stock way down here when it was trading, I don't know, 500 shares a day or something crazy. And it just kept working. So I would be adding more all along here. They marked up it, but I'm sure, I don't even know where it started here somewhere, but it'd be buying here some and buying here some. And maybe over here, if I bought a little bit there, I might sell my top stock. In other words, the top price, if I paid over here, I might sell a little bit of that and buy it back plus a little more over here. So I'm adjusting as the market goes, but each little phase, I'm having more and more of it in that stock. So somewhere up here, it might be 50% of the whole portfolio or even more. But it's only as it's proving itself and I'm ahead. I would never go in there and say, oh, this is so great. Buy me half of the account or buy me all of the account or something crazy like that. The market has to prove itself. Because you think something's great and it's not working, well, don't keep buying more. Start cutting it back. So you got to be flexible. Yeah.
Early in your career, after you mapped out and determined your investment approach, how long did it take you to get the implementation right to generate really good returns?
It's a little hard to remember because that goes back a long time. I don't.
It was the Nicole stock. It was the
Syntax.
So I think you told me that you, in the market before that, you had made a lot and then you gave a lot of it back. And that's when you did a lot of studying and you saw the 8-week hold period. That's where you got that. And so you really nailed it on that next round.
Do we have?
So yeah, 61 was the year that he round tripped a few things, and then you nail things down and buy Chrysler and then Syntax. That's what
Those are the two big ones. Do we have those charts?
Yep.
That goes back a long time. Well, look at it. I can show you what was done. Yeah. Oh, there's a big thing. Most of the stocks that I made real money in were simple kind of stocks, like you know exactly what they do and exactly what they make, and you understand it, and earnings are big. Now, we built models of prior big stocks, and this was what we call a high tide flag. Stock takes off and runs and holds in there very tight like that. And I think Syndex did the same thing. There were 2 or 3 others.
Well, this is Syndex.
Oh, it is? Okay. All right. Well, so we had typed patterns of stocks that took off and had, 3, 4, 5-fold moves that had that pattern. So when this stock runs up like that and it shows it on a chart, I'm looking at that and saying, boy, that's a high tight flag. And as soon as it comes out there, I'm buying it right there. So it's bought there. Now, also, if it goes up 20% in the first 2 or 3 weeks, I must hold it for at least 8 weeks. So I'm to buy stuff. Now, that's learned just by going through past history, the big winners, what they do and how they act. So if I'm buying here, 1, 2, 3, 4, 5, 6, 7, 8. By the time I get that 8th week, I've gone through a correction and I'm already up here. Now I've got a big cushion, see? So what I'm trying to say is have rules and don't go by, I like this stock or how I do it today, or I think that Omni's bad, or I think Obama's great, or I think Obama's nuts, or whatever. Have your rules and you just follow the rules. So if I buy there, and I go up 20% in 3 weeks, I'm going to hold it for 8 weeks, period. Just because my past history and rules tell me that's a sign that, hey, this could be a big stock and I have to play it this way now. So, 1, 2, 3, 4, 5, 6, 7, 8. By the time it's up 8, I've had a correction and I'm already up now a huge percent. So now I've got a big edge and a big advantage because, so I would suggest you make rules. And if this happens, I do this. If that happens, I do this. If this happens, I do that. If I'm right, how do I follow up and by how much? And don't just play it by ear as you're going to go in the market. Have a set system and just apply the system. So anything I buy, if it goes up 2.5%, I'm going to follow up and buy some more. Have you ever bought something and it turned out to be a big stock and yet it wasn't your biggest position? So my second buy is automatic. I don't care what it is. If it's up 2%, 2.5%, I buy some more. A little bit less than the first time, but I buy some more. So I always want to make sure that I've got a big position in something that turns out to finally work. Yeah, some questions here.
If you have already 100% in your position, how much do you add on? What
If I had 100% in one position,
you already, like you bought everything that you wanted for that one position?
you're
Your add-on buys. How big are your add-on buys
Is my whole portfolio up 100%?
No.
Or what, the stock?
for the stock? Like, let's
The stock is up.
Well, she's saying you own 100% of the position that you want. So what's your add-on buy in that?
Well, I don't have any set thing. I mean, I start with a certain percent. And then I follow up with a certain percent. It's a little less, and I make a third follow-up, possibly a little bit less. So I have these percentages that I work on.
4 and 5. What are your add-ons for number 4, 5, 6? If you have such a long run-up.
Well, if it corrects and builds another base, I can maybe start adding some more in that base. And depending on the situation, I might buy it 2 or 3 times coming out of there. So in theory, not in theory, but in practice, I could wind up with 50% of my portfolio in this one stock if it just kept performing and performing and performing. But now I don't go in and buy 50% to start with. That would be nuts. And you want to watch this. You see some stock you like, you say, wow, man, and I don't know, you put a bunch in there. Well, it's okay having a big position, but make that stock prove it deserves that. So I will only get a 50% position when I'm like way ahead in the stock. Because the second buy was made, I was up 2 or 3%. The next one was 2 or 3%. And eventually maybe it's up 15 or 20%. Now, when you've got some up 15 or 20% and you build a new base, you've got the edge and advantage because you've already got something that you've made. And so sometimes that'll step up and coming out of a base, if I'm up 20%, I can go in a lot heavier than I might normally do. So what I'm saying is you go by your situation and having a set of rules. So I could wind up with 50% in one stock or conceivably 100% in one stock, but I would never buy it to begin with 50% or 100. By the time I get 50% in a stock, I'm already ahead quite a bit. You see what we're talking about? Yeah.
Yeah. How did you GoPro? Just really, you might smell something on the way out.
GoPro? We got GoPro out there? Well, I'm assuming you buy it over here off of a chart. Now, the fact that it goes up that fast, I have one rule that it goes up 20% in less than 3 weeks. I have to hold it for 8 weeks. So that 1, 2, 3, 4, 5, 6, 7, 8. So I would hold it through here, and it still looks like it's getting support in there. It's moving around, and you don't know for sure what's going to happen. If it starts to act worse, I'll start selling it. If it hangs in there and eventually comes out, I might actually add something. The earnings are good, and the estimate is good. So And the fact that it can move this fast, that far, says it's got potential. So,
right? Does that bother you? The dog breaks setting down while the stocks and oils are getting higher.
well, look at what it's done. It started at 24 and it doubles at 48 and it breaks out at 48 and it doubles again. So I'm going to give this stock plenty of room. I'm assuming it's in a base building process now. Maybe it's topping. I don't know. But it depends on where you bought and how much you've got. And it did pick up in volume over a year. So I don't know what to say. In some cases, you might sell a little bit in here. But you kind of bend with it. That doesn't mean you sell everything. If it acts much worse, eventually you sell all of it. Yep.
You know, if you're a long-term holder of Tesla, let's say out of their phase T, what would your thought process be now in terms of like drawing a line in the sand? Because Tesla's not the phase well. Where would you draw the line, say, what style?
Well, if you've been at this a long time and you know how to use charts, so I think you can pick a place that would, if it goes below that, I'm going to start selling some. And I don't know, you might pick this below a bit here. If assuming you bought it somewhere up in here and you got a huge gain, if it comes below there, I probably would sell some. Now, I don't know, the volume figures on these red weeks were all up higher than the blue weeks before them. So there's some distribution going on already. See, the way I measure volume is I look at this red week and what was the prior week? It was a blue week and now it's a red and a two and now it's one blue and now there's two reds again. So there's a little more distribution going on here. And if I owned it from something a lot earlier, I might be cutting back some in there. But I'm not going to sell the whole thing until something looks like it's really wrong. Now I'm assuming that, you have a big gain in it.
Do you use the 200-day limit at all?
This line?
Yeah.
Well, it's worthwhile because, see, it held and bounced off that 200-day there. It held, it didn't quite get there, but in effect, that stopped it. It held here. It's held once, twice. Now it's below it and the volume picked up. If it came down again next week and the volume's up, I'd probably be selling. Now, you have a choice of do I sell half my position or what, or the whole thing. Depends on how it acts at that point. We can draw a trend line below this, and you see it's acting a little worse than the market at this time. Oh, these earnings too. The earnings are down, right? I think if it wiggles around a little bit more and doesn't act right, I'm out. Because what I want to stock with is the earnings going down. Even though you might have made a lot of money. So you have to draw a line somehow. But that doesn't look over and encourage you. Okay? You have to draw a line at some point. And if you have a big gain, at some point you got to take it. All right. What else we got?
I think we got time for one more question. And right here.
Yeah, so all of us here are trying to do our best to follow these rules, but obviously knowing them and following them are usually two completely different animals. You've been able to do it so consistently throughout your career. Like, how have you managed to stay so disciplined, to be robotic in that way, and to take the emotion out of it? Because we have these rules. We're trying to do that, but
You're intelligent.
well,
You gotta have rules and follow the rules. And it's discipline. Now, it's your own money. You're putting thousands of dollars out there, and you better have the rules and follow them. And you'll find out if you don't follow them this time, you don't follow them that time, you'll look back on it and say, wow, then I could have done this, I could have done that. Oh. So have your rules and just follow the rules. And if you can't follow the rules, sooner or later you're going to get kind of kicked around. The rules are built based on past history of what works and what doesn't work. You have to draw a line at, if I'm wrong and I'm down X%, I always sell. Now, what's that percent? Is it going to be 5%? Is it going to be 7%, 8%, 10%? Or do you even have any rule at all like that? But what do you do? Wait until I'm down 20%. Oh, it's cheap. I'll buy some more. And now I go down 10% more. Now what do you do? So you have rules and follow the rules. The rules will protect you, okay? Any other questions with that? Yeah.
Bill, maybe your best strength or one of your greatest strengths is staying in the moment and buying back a stock that you bought, lost money in, and then you repurchase it. Can you just describe your mindset, the thought process you go through to buy it back?
Well, look, as you're going along day by day and week by week, you're looking at what's happening now. And is it normal or abnormal? So you may have sold something and it wasn't acting right. And all of a sudden, the next 2 or 3 weeks, this stock starts acting great. Well, you should be buying it back if it's in the right kind of position, even if you pay 2 or 3 points more. So it's automatic according to rules. It's not how you feel or what you think, or, I shouldn't have done this, and that's water under the bridge. You can't solve that. So I will buy something back if I sold it out and I think a week or 2 later I was wrong. And I don't care whether it's 2 or 3 points higher. It doesn't mean anything. I just want to be right at the time and place and do what you should be doing at the time and place. Now, you're going in the bull market, but in the bull market, sometimes they correct. You have little corrections of 5, 10%, and a later corrects 15 or 20%. So maybe you're selling it, and then it comes out of it and starts running up again. Well, you got to buy it back. So the market's not easy, and it doesn't do what you want it to do, and you just have to train yourself to do what you got to do depending on the situation. So, and if the stock is going to go up and you had it at one time and you sold it, at some point, if it's acting right, you got to get it bought back, even if you're paying more. So it's discipline and it's rules. And your emotions just don't mean anything. The market doesn't know you and it doesn't care what you think. It's going to do what it's going to do, and you got to figure it out and shift back and forth. And maybe you buy 3, 4 stocks and you have to sell all of them because they didn't work. And the next stock is going to triple. So you follow the rules and do the things what you're supposed to do at the time and follow up if it's right. And if it isn't right, cut the loss. And sooner or later, that works very well for you. But if you don't follow those rules and you start going by, well, I really like this stock, or so-and-so told me this, or all this other stuff, that's garbage. You've got rules and procedures, and when it does this, I do that, and when it does this, I do that. And you do one thing today, and you may have to turn around 3 weeks later. So you can't fall in love with some stock and have a pet stock that you get all wrapped up with, that you're going to buy Apple no matter what it does. So you follow rules, systems, and that's the best way I can explain it. And you're going to be wrong a lot of times. And when you're wrong, cut it as quick as you can. And we all make mistakes. There's nothing wrong with making a lot of mistakes, as long as you handle them right. And then the big winner that you finally come up with, you handle that right. So expect to make some mistakes. You just don't want to get hurt when you make a mistake. That's why you cut them quick and short. You ought to be cutting a stock that's down 2, 3% in some cases from what you paid. Maybe in other cases, 5%. You ought to have a rule, maybe, that I'm going to always cut. No longer am I going to ever lose anything more than 7% on a stock. And I may start when it's down 3 or 4% and sell part of the stock. And if it goes down a little bit more, I'll sell a little bit more. But have rules that protect you from ever getting in a jam, and that also will allow you to make a fair amount of money when the market is right. And you're always there. So you're always going by the market, not what you think or what you would like to see or what you believe. It isn't that difficult, and you're in a great country with innovators and entrepreneurs out there constantly every year. There's always a leader that's going to take off and double. Now, if you missed some of those, go back and plot on the chart or look at the chart and study that and say, how in the world did I miss this thing that came out of this base and it tripled? Because you learn through your mistakes, and so you'll get better and better and better if you keep reviewing what did I do. While on the chart, where you bought every stock in the last 3 or 6 months, and then separate them out into the ones that were mistakes and the ones that were right. And part of the key is the ones that you were wrong on, cut it as soon as you can. You can't sit and because you love the stock and now you're down 15%, you haven't done anything. So you can never have a loss that's probably more than 7 or 8%. And so your average loss when you're long probably is 3 or 4%, maybe 5, but no more than that. And if you're having 15 or 20% losses, it's just not operating very well. Now, on the other side, when you get a gain of 15 or 20%, I think every once in a while you should take some of those. Maybe half of them, when you get to be up 15 or 20%, you take them. And the other half, you hold. And this will allow you in some way to hang on to that one that might double in size. But still, it doesn't hurt you to take. You're playing baseball and accept a few singles and doubles, okay? And you'll get a few home runs every once in a while, but nail down some as you're going along. So I'd say half of them should be just because it goes up extra percentage, you sell automatically all the time. And you again, to get yourself ahead, and then you can maybe play one up or the move because you're already ahead, and this one is really acting great, and earnings are up 100% and all that sort of thing. So have a set of rules and a system and follow. Not, I'm smart, I'm an attorney, and I'm this or I'm that. I made straight A's in school, and I think I know what I'm doing, and I'm smarter than the market, and I'm just going to go with how I feel because I'm so smart. And you find the market is a little bit trickier than you thought. So you can be the best attorney in town, make straight A's through school, and you can lose your shirt because you think you really know what you're doing. So you got to have rules and learn what are the rules of this game? And it's a little different than other games. And you can make mistakes, but how do you handle a mistake? How can you lose 20 or 30% of the market? Well, you had to sit with some mistakes, right? So you should never be down 30%. I don't think I'll ask anybody if they were ever down 20 or 30%. But markets are difficult. So you have to have rigid rules and discipline. And you follow them. And you don't argue in the market. And you get a little bit better, and you get in the roaring bull market, then you should make double whatever the S&P is. The S&P is up 40%, you ought to be up 80. Now, if you're up 80, you better be taking some gains. Because sometimes, anybody ever had a round trip, you were up so much, I'm up 30%, and boy, am I doing great. A year and a half later, oh man, I gave back the whole thing. So the only way to prevent that is to have rules, then follow the rules. Don't get carried away and say, wow, man, I'm up 30% now. I'm smart, and I'm going to put more money in now because I'm really good. And then you get the correction, and you wipe out the whole game. So I think if you should never be up 20% and wind up giving it all back. Okay? So figure out your rules somehow so that hopefully you build a little bit here, a little bit there, and you get into a real strong market, then you make an awful lot. How much is the market up for the year? 10%?
12%.
Well, okay. I would say if the market's up 12% this year, if you really know what you're doing, you should probably be up and double that, 24%. Now, don't feel bad if you're only up 12% or 15%. That's okay. That's good. but it is very possible in the leading stock to be up about double whatever the market is. Now, you say it's up 12, and if you're up 7 or 8, well, what are you doing wrong? So, and do you know what you're up? Or you're just buying stocks and, well, I'm doing pretty well, and you don't know whether you're up 5% or 10% or 12. It makes a difference because you can see, am I on track or am I off track? And then, so always know where you are and what you should have been doing and what things you did that didn't work and what things you did that didn't work. Yeah.
I just wanted to thank you for an amazing weekend and just want you know.
Well, we're going to check 5 years from now and you said made a lot of money.
And I just want to say how thankful, you know, and I'm sure everyone thought it was a special weekend. So thank you.
I think all of you should set up a set of rules that you're going to follow. I have buy rules, and then I have sell rules. And everyone should write it out and then follow, you know, the rules. And you should do a lot better. So decide what your rules are, and you build a set of rules that almost force you into making money. In other words, when I'm going to take a profit, it's going to be like this, and when I'm going to take a loss, it's going to be like that. And you can be right half the time and wrong half the time and still make a great deal of money if you have the right kind of rule.
Speaking of rules, Jonathan's saying that it's we have to garage 50.
Free audio post-production by alphonic.com.